Today I'm going to be discussing the West Market Street submarket, which is by far the largest submarket in the CBD, with approximately 25 of the 40 million square feet of office space in the Central Business District. Last year we saw a negative absorption of 300,000 square feet, a vacancy rate of 14.8%, and the average asking rent ended at $27.56 a square foot. The two main events that contributed to the negative absorption last year was the former Verizon Phantom space over at 1717 Arch coming available and putting 311,000 square feet of space onto the market, and then the 127,000 square feet that Arkema put on the market for sublet at the top of 2000 Market Street. This next slide shows quarterly absorption beginning at the last market expansion in the first quarter of 2005. This growth continued for over 3 years, creating 3.25 million square feet of positive absorption. We showed the occupancy downturn beginning third quarter of 2008, which ran for approximately 8 quarters and resulted in 1.35 million square feet of negative absorption. 2010 did end on an upbeat note with the largest quarterly positive number since the end of 2007. The final quarter of last year saw 340,000 square feet of positive absorption. It's pretty significant. And I think the question just remains, is this the actual end of our downturn? West Market Street leasing activity last year. Arkema consolidates from Center City to backfill space out in Arkema consolidates and their space is backfilled by Marshall Dennehy at 2000 Market Street. The reinvestment fund moves from East Market Street to 1700 Market. Star Site moves from 1650 into 1600 Market. Arthur Kerman moves to 10 Penn Center. I-90 comes in from New Jersey into Center City, Philadelphia to Bank of New York Mellon. And then last year we had some pretty significant renewals, the largest by far being the EPA, which renewed at 1650 Arch on the bottom half of that building in excess of 300,000 square feet. Hangley stayed at 1 Logan. Coase & O'Connor exercised its 5-year renewal option and finalized its arbitration to stay in the Stock Exchange building in over 200,000 square feet. As we discussed, Verizon contracted significantly but did renew at 3 Logan. White Williams is staying at 1 Liberty. And finally, Comcast not only renewed at Center Square West, but also took an additional floor for a total of 90,000 square feet. West Market Street investment activity was somewhat muted last year. The largest event by far was Brandywine's acquisition of 1717 Arch, which they rebranded to 3 Logan Square. Barringer Harvard acquired its first mortgage over at 1650 Arch. 2 Liberty went onto the market but failed to trade. Brandywine also acquired a 25% stake in both 1 and 2 Commerce Square. And 2040 Market Street, the former AAA building, which has been, it's been empty for some time, was offered and is now in agreement with Philadelphia management. This next chart demonstrates the concentration of vacancy in a limited number of buildings, with 5 of 40 buildings we track in this submarket, representing 41% of all vacancy in the West Market Street corridor. These building horizons show the 5 properties with the largest vacancies. The available space is further concentrated in 3 Logan and Center Square, which represent in excess of 750,000 square feet being offered on the market. This final slide illustrates the largest contiguous blocks with former Verizon space at 3 Logan. Sunoco has put its space up for sublet at Bank of New York Mellon. There's a large block of space at the bottom of Center Square West, which was formerly occupied by Comcast and Tenant Health. And there's a 100,000 square foot block of space in the base of 2 Commerce, formerly occupied by Citizens Bank and Lincoln Financial. And then finally, there's approximately 3.5 full floors of former Fox Rothschild space being offered at 2000 Market Street. Fox has relocated within the building, and then you see the sublease space up top. That's the space that Arkema has sublet, and Marshall Dennehy is committed to moving into in 2012.